Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. It's going to be one of those mornings here. I can tell what kind of morning it'll be when I go and look at my scanners in the Benzinga Pro. I've got my up scanner and my down scanner, and whichever one of those is populated by leveraged ETFs, and that's the one that's going to that's the trend that'll dominate the morning. So this morning, my up scanner is dominated by all of the inverse ETFs out there, the pro shares, the velocity shares, the directions, not a lot of stocks near the top there. So it's going to be one of those mornings where the market is under pressure. As far as individual headlines, well, we have a couple of M&A deals off the table. We'll talk about that. We'll talk about the pressure yesterday and just the turnaround in some stocks. Jerome Powell probably not helping things. He wasn't super positive yesterday in his remarks after that meeting. Our guest, we have two guests actually. Marc Chaikin will join us at 8:15. He is the founder of Chaikin Analytics. And then at 9, I will be joined by Steve Kalayjian. He is the co-founder of TickerTocker, and he's also a chief market strategist. So Marc at 8:15, Steve at 9. We'll bring Joel on now. Joel, give us a quick update here in where we stand now in the pre-market session. Don't forget, you're on mute, though. Let me do the old mute trick. There we go.
Good morning, investors. And I want to say good morning to Del Boy. Looks like 9I. Listens to us in the UK. I will answer your question when Triple D comes on here. Something we haven't seen in a while. In the red and deep in the red. Choppy session yesterday off Jerome Powell's comments. Weak close and just follow through in the after hours. Big follow through on the downside, folks. We're down 69 handles. I'm talking the June contract still, and that will be until Monday. Didn't get much above the close, 31.86 close. High right there, pre-market low 31.14 and a quarter. I put a lot of numbers on my sheet, but the last low I have here is 31.0650. That's only 8 points away. So there's my next target on the downside. Gold hanging out in the 1700 handle, up 1270 at 1,726. Silver still over 18. That's up 29.4 cents at 1809. Bitcoin in the red by $120. Those are the futures at 9,815. Triple D, a lot of red on the screen here. I hope you navigated it well overnight.
Yeah, I'm positioned pretty good, I think. I'm bringing in some winners here right now. Obviously, I trade pretty hedged overnight, but I was a little biased to the short side, which is going to help me, I think, this morning here, because you could see, the weakness that we had. It was obviously we were weak from 4 o'clock right to 8 o'clock. So I had a bias going already that we were going to be weak. We had a little rally in the S&Ps after the 8 o'clock close, and I was like, oh, I'm not sitting that pretty. I'm kind of more positioned to the short side. And then obviously the overnight collapse. So it's probably going to be a good trading day for me. With regards to the overall market here, I mean, you could call it a lot of things. Obviously, maybe this is some profit taking. I mean, we've been on an incredible run. Let's put this in perspective, because a lot of people are coming out here and, throwing in the towel. We've had a really good run. It was ridiculous. It was so easy on the bulls. We were due for a major pullback. Is this the pullback to buy? Depends on the stock, I would say. I mean, obviously, some of the stocks, like, and everybody wants to talk the airlines because they flew and now they've been grounded here again. All those puns intended. You get to a point where they're probably bounce. They're probably due for a bounce, because they're probably, as much as they were overbought a week ago when we were talking about it, and we talked on the Friday show that it felt like upside capitulation, it indeed was the top. So, sometimes people call the top. I actually did call the top on Friday on the airlines and the banks. When you see these ridiculous moves, you can sometimes just feel it. And that was all feel last Friday. And if you rewind the show, I was calling it before it happened. I said, multiple times on the Friday show, and I think I even tweeted it out, that it felt like everybody has to buy. Everybody just wants to be in. The shorts are throwing in the towel. And that's why I was talking about shorting the open last Friday. And that's when Wells Fargo topped out. And I didn't take any heat on that at all. Obviously it would have been nice to hold those shorts because you're looking at Wells Fargo at 33.89 open on Friday. And since then, it's just been straight down. It's back at 27. So, on the banks, let's talk like about 50% retracements. I mean, are we through that, Joel? Let's look at Wells Fargo first. We can come back to the airlines.
Do that, Dennis. I just want to get this question out of the way
real
quick. So we have Del Boy 9-1, I think, or 9L watching all the way from London. And I've been talking about the expiration of contracts and rollover, and I probably didn't make myself clear. The actual expiration of the June futures contract is not until next Friday, and it's called Triple Witch. If you include the options on stock futures, it's the Quad Witch. But that happens 4 times a year: March, June, September, and December. But what happens is they roll over the contracts. That means the front month, the one the majority of the volume in, rolls over on the Wednesday preceding the rollover. So the second Wednesday of the month. So yesterday was the second Wednesday of the month. That's where the volume officially migrates into the September contract. Now you can tell most people are still trading the June right now, but the open interest hasn't shifted over yet. So that's what I meant. There was no expiration. It's just a rollover of the contract. Now the Merc and a lot of traders consider the September, the U, like Spoos in my Twitter name, as a front month contract. But for me, I will still be trading the June today and tomorrow because that's where the lion's share of the volume is.
Why does the rollover matter?
Why does the rollover matter?
Yeah, because, and I'll be honest with you, I don't use it in my trading, but I know you use it in yours and you've used it successfully for 25 years. So I'm not going to say, it doesn't matter anymore because I just don't trade futures. But if you're a futures trader, why does the rollover matter?
Because it splits the liquidity there for a couple
great
sessions.
Point.
Yeah. So when you're splitting liquidity, you get more pockets, vacuum pockets.
Great point.
What did you see last night? What did you see yesterday during Powell's speech? I mean, absolutely thin, right? Also, the open interest has to transfer over. And a lot of times you'll see, and this is kind of like a precursor to the actual rollover. I mean, to the actual expiration. And a lot of times expirations are major turning points in the markets. The March expiration turned out to be, a wild one. And, for the market. This expiration, who knows if we could you just see a lot of excess activity. You see a lot of unwinding of positions, and a lot of people are changing hearts. So as the open issue shifts over, but the main reason is the vacuums that it creates in the market. And
that's a great point you're making, and something, I don't think we've mentioned that on the show before, but obviously liquidity is a major issue. We talk about overnight. That's why you have the big moves overnight. I know we just had actually Andrew Ross Sorkin had a guest on and was talking about the moves in the last 25 years in the stock market. And he was saying if you had bought overnight and sold on the open, so bought the close and sold the open for the last 25 years, you're up like 600% on the S&P. If you had bought the open and sold the close, you were down 3% on the S&P for the last 25 years. So for the last 25 years, intraday, the market has gone nowhere. That's unbelievable. It's all been overnight. So all the gains are overnight. It's probably why I switched to overnight trading a decade ago, because I realized that's where the good action was. So, buying overnight and selling the next day, you get these pockets of liquidity and the stuff really moves. And I've always been one to, trade where I can make the most money. I want to, obviously, so I switched to trading, a lot of night trading and after hours trading and pre-market trading to take advantage of, and holding overnight to take advantage of these overnight moves. And I didn't really know those stats. I just realized that, hey, I can make a lot of money trading overnight. And then I switched to an overnight trader. I mean, there's not a lot of traders. I think I'm pretty unique. There's a lot of day traders, a lot of swing traders, and those obviously trade overnight. But I focus on like trading the close and holding the next day. Like, okay, I think this stock is going to be doing something the next day because there's a catalyst. Like I've really switched my focus. But, I've always talked about liquidity being lower, but, when you talk about the roll, you've talked about it for years. You mentioned that pockets of liquidity. Okay, now we have even less, which means we can move more.
Even more. Yeah. And I would say, over the years and stuff, some of my better winners have been things that I have put on overnight and with a stop, it's just easy. Like put me in here. And I was trying to sell too high last night. I was trying to sell at 31.97. They laughed at me. They only got to 31.88.50, but I would have had a good stop in there, right? A generous stop. And if I got stopped out, I got stopped out. But if it gets something on the downside, it would have more than exceeded my target. So, and the trends are just different. But just going over to the quad witch, expiration, we've seen a lot of different things, turning points in the market. March rollover I'm looking at, it wasn't quite the low, but those were pretty unusual times. And then that craziness that we had right before we turned, and we talked about that was Mark. There were some people unwinding, like that last rollover into that volatility must have been extremely tricky. And Mark talked about the unwinding of the gamma trade and whatnot and inducing. So I don't know if we're going to have a repeat of what we had in mid-March or not, but all of a sudden we're 115 points off the high of the move and looking weak.
Deserved. We needed a pullback, and the trash stocks, when they started buying bankrupt companies, you knew you were getting close to the end. I mean, when they can't stop buying, the Hope Trade and Robinhood and, whoever it is just coming in and buying anything that's down, you knew it was getting close to the end. So I think for the trash stocks, I think the highs are in for a very long time. I think if you're looking for good companies, though, and think about, the stocks that have started to lead the last couple days, the big tech. You get some tech pullbacks here, probably buying opportunities again. I don't think the tech's going away. Some of the valuations on some of the tech stocks are extreme, but on some other ones, they're not. We know I'm loaded up with Amazon, Apple, Microsoft, Google. I've got the whole, that's my portfolio. If you look at my portfolio, it's just full of tech. It's been holding up very well. I mean, today it's getting smacked, but even the stocks, if you look at the individual tech stocks today, they're not down like the overall market. Apple's down 1.5%. SPY's down 2.2%, so Apple's not even falling as much. The Qs themselves down 1.5%. They usually move very close with Apple. Amazon down 2.2%, so Amazon's down a little bit more, but Amazon's been on an incredible run too. 4-day move needed to cool off a bit. It just got silly yesterday up at 27.22. Needed to cool off. But on a pullback here, you're not in a stock like Amazon. I still think Amazon's going to 3,000. Am I coming in and buying the American Airlines pullback? If it gives me a double bottom or something for a trade, maybe. Am I putting AAL in my long-term investment portfolio? No, I am not. And I still think you're going to have a couple airline bankruptcies here. So even though they've had these incredible runs and, and the cruise lines have as well, I don't think they're out of the woods on any of this. If we have, and this is a big if, but if we have to go into a second lockdown, there will be so many bankruptcies coming. It cannot, the market will be significantly lower if we have to go into a second lockdown. I don't think they're going to do everything in their power not to do that. Trump is dead set against that. We'll be having to have, seeing hospitals overwhelmed, deaths, like going way higher than 2,000 a day because we know the market's already comfortable with 2,000 a day. That would have to be the case. But if COVID comes back with a vengeance on the second wave, and I'm not saying this to spook you here today, I'm just saying reasons why the market is nervous today. We're seeing Texas, we're seeing Phoenix, Arizona, we've been seeing it for a few days, but it keeps rising there. The reopening is not going that well. So we're getting a little taste of the states that reopened pretty quickly. And they're not doing great. And that's why you're seeing a lot of this, lockdown trade, those stocks showing life, and the stocks of the reopening going down. With that being said, we have a long ways to go. We have a lack of information. We don't have the clarity. So we don't know if this is a pullback to buy or if we're now in a sell the rip market. But what I will say is if you're buying quality, I think it's a pullback to buy. If you're buying trash, they could bounce. Don't get married to those positions, though. That's all I'm going to say, because trash is trash, and a lot of these companies are going to still struggle.
Hey, Dennis, one of the top comments here to start the show from Joseph at Triple D. Thanks for the top on airlines. I let my friends know, and they all sold, and we're grateful. So
Good.
there
You
you
sent me a
go. Yeah,
Christmas card.
yeah. And sent him a Christmas card, and just one other comment that you were making.
And
Uh,
then we'll bring Mark on.
and we're going to bring Mark on. I see Mark in the background.
Sure.
Very tough market yesterday because as the SPOOs were indicating, bouncing around and shorting, and I'm staring at Microsoft, Apple, Amazon, Google, and they're just super green. You know what I mean? And those are the top components. So, man, it just goes to illustrate what you were saying about the strength in tech. Mr. Chaikin, how are you doing on this volatile Thursday morning?
It's not volatile. It's just straight down. I'm doing fine.
Mark's been bearish for a bit on the show. Obviously, I have too. When we look at it from a fundamental basis, a lot of this rally didn't make sense. And we got to think. And I was just talking about the Hertz, the bankruptcy trade, where they were scrambling last week trying to buy anything. When you start seeing bankrupt companies going up 300-400%, the top is. It feels like it's coming. That's why I was saying last week, I felt like we were topping out on Friday, and we ended up topping out on Friday just because it got too silly. What are your indicators saying now? I mean, there's some good stocks out there too. There's some stuff I'm sure you're still bullish on. Mark's been bullish and bearish, for in different sectors here. Tell us your feel on the market, for the last couple of weeks.
Well, over the last 2 weeks, I've sort of transitioned to a place where I wish I had transitioned a little earlier, which is that you can't fight the Fed.
Yeah.
And market momentum is just enormous here. And we're seeing a pullback. I thought we'd see a pullback of 5 to 10%. It would come out of nowhere, and it's likely to be over very quickly. The one thing I've been consistent about is what you just talked about. Since mid-March, I've said that my biggest fear is a premature reopening of the economy that doesn't go well. I think it's in an election year, given what happened the last time, I think it's like 99% that you can't put the genie back in the bottle. So I don't think there's going to be a second lockdown. I think people are going to die, sadly. But you also have to look at the fact that these protests, the Black Lives Matter protests, have triggered part of that second wave. A lot of the athletes at colleges who participated in these protests have come down with the virus and also transmitted it. So there's been a lot of social interaction as opposed to social distancing without masks. And so I think this is just going to be a fact of life, and it's not going to go away in the summer. It's going to come back in the fall. And as Fauci said, this is probably going to be with us for years to come. So the market has somehow adapted to this. The Fed has given us an unlimited put. We've recognized that all along, but I wasn't early enough in recognizing the power of that put, combined with the fact that $1.2 trillion has moved into money market funds since mid-March. There's an awful lot of cash on the sidelines, still a lot of shorts to be covered, and I'll let you guys start interacting on that note.
What stocks do you like? I know we're getting a pullback here, and every time we get a pullback, people want to know, what are you buying? Would you be buying anything in this pullback?
Yeah, I tell you what I don't like. I don't like this this cyclical trade. I think that is just dangerous quicksand. I've continued all along to like the secular growth stocks that made new highs yesterday. I'm scratching my head to figure out who barreled into Microsoft, Adobe, Apple. But they did. The spikes up there are just unbelievable. I wonder if that has to do with some sort of flow into the queues. I know money had come out of the queues last week, but I wonder, this could be the chicken and egg story. If they're buying the queues or the TQQQ, which has just been a barn burner, then they've got to be, the basket creators have to be buying these big stocks. And I think that's part of it. It's hard to believe that there was enough demand on its own for those big names to push them all to new highs like they did, but they did.
It's been an unbelievable run for a few stocks, and the run continues, I know, and you're just pointing those out. NVIDIA new all-time highs yesterday. Apple new all-time highs.
PayPal, love PayPal.
And PayPal too. It's been an unbelievable move. I think about the move from the March lows in these stocks, and who would have thought 2.5 months later, when we're looking at the grim situation that the economy was in and is still in to a certain extent, that you'd see PayPal double in 3 months, that you would see Apple, one of the biggest companies in the world, go from $200, just over $212 to $352.
I'll give you an even more bizarre story. Lululemon, with their stores closed, the stock has made this extraordinary all-time high, and Wall Street analysts are falling over themselves to raise their estimates.
So is this just lemmings, the analysts just lemmings here, or is there something
the analysts
to
are
it?
Lemmings. Yeah, they always
lemmings. Mark says lemmings.
Yeah, definitely. But
man, we are getting pounded here, folks.
We are
about to breach 3,100. Holy mackerel! Wait for
I think we're probably going to test 3,000 very, very, very
like by
quickly.
the end of the show.
Well, they tended to rally on the unemployment claims number, so let's see what happens. But this is now, everybody's saying that there's a new bubble forming. Go back to February before the market peaked and look at what Shopify was doing and Tesla. I think this is just a continuation of this incredible speculative undercurrent in the market. Now it's in Tesla again, and it's in stocks like Lululemon. That chart to me looks like 1999, but in 99 you didn't have the Fed giving you an unlimited put.
I want to just add that Lulu is due to report earnings after the close today.
Yes.
So anyone trading that, note that.
Yeah, and boy, the bar is very high there. I don't know. What do you guys think? This is a market. Again, this isn't 99 where you're buying eyeballs unless you're looking at Nikola. How do you pronounce that? It's so new, I don't even know how to pronounce it.
I assume it's Nikola, like the person.
Yep.
I mean, it was 1999 for a week or two here, and there's a point, and I've been making this point on the show here too, is if you're just getting your Robinhood account open, and it all happened pretty fast. Like if you were just getting your Robinhood, and people don't move quickly, but they get shut out, their job middle of March, and they're like, okay, well, what am I going to do? And they're like, oh, this day trading thing. They see this Portnoy guy, coming in and being a day trader. He's at home. Let's just try this day trading thing out. So you have a lot of new traders coming in. Any new trader that's getting their account open late March, early April has only experienced the good, the rally. They didn't see any of the March stuff. They saw it in the news maybe, but they didn't experience it with their own money. So you get to a point where, the frenzy just took over here in last week where, these day traders and newer ones, Robinhood, we were hearing that 5% of the Jets ETF was held by Robinhood accounts. That's an incredible amount held by retail traders, because they're small, but when there's so many of them that they all add up. So they haven't experienced these down markets yet. So this is like the first real big slap in the face. It's like, they were maybe buying American Airlines last week and, maybe they bought it at 18 or 19 and ran to 22. Like this is the easiest game ever. And now they're sitting here looking at a 14 and scratching their heads a little bit saying, well, it's got to come back, doesn't it? They're probably saying that yesterday, and now it's down here again. Is this not maybe a little bit of the Robinhood shakeout trade we're seeing, Mark?
Oh, well, it's definitely a shakeout trade, and whether they go away or not is anyone's guess. But I think what you've got to consider here is that the bad news that everybody's referring to this morning about the reopening, that's been around for 5, 6, 7 days. You can go back to your Sunday paper and, the numbers in Texas, California, Arizona, and Florida have been ugly.
I was saying the exact same thing on the pre-market show to Dennis. These numbers,
they've been there. People have been ignoring them though.
Yeah, but this is just, people finding a reason why the market's down. The market's down because there's profit taking going on. Powell's comments were as good as you could have hoped for. So, it's sort of a sell on the news. Okay, we reaffirmed that there's zero interest rates going through the end of 22 and probably longer. And they don't see a reflation problem. So I think profit taking, and I just wish I knew what went on in those big stocks at the close yesterday because it was magical.
I think just people scrambling around trying to find and find the winners, and this is what you know, especially when you're a newer trader. I mean, I've seen, you know, we've had a prop firm here for, you know, I've been working prop for 21 years. I've saw a lot of new traders come in. So, you know, you really get an experience of how the new trader thinks. You know, I have to think back 20 years when I was a new trader as well, and how I thought back then too. But you think like, okay, what's moving? Oh, I'm going to go jump into that. I'm going to go jump into this.
Yep.
I mean, this is what the newer traders go, oh, this is going up. I got to go buy this. And that really, and you know, and it's called the chase trade. And I've been saying for years, I don't chase because I learned in that first 6 months that I lose a lot of money chasing. Chasing worked all last week. It worked big time.
It's worked for the last couple weeks.
Yeah.
Really, the last week, it really started to work, though, where you saw, you know, American Airlines traded from 12 to 15. And I said on the show, well, I've been punished chasing. I'm not going to chase American Airlines up 30% here. What did it do? It went up another 50% the next 2 days. Now my jaw hits. I'm like, I cannot believe these things. But I think it's so many newer traders just chasing the hell out of everything. And
Well,
now the
remember,
chase is like a little bit, you know, like people are probably scrambling to get the hell out.
Well, Dennis, remember, you've got computers programmed to pick up these momentum trades. So,
Oh, yeah.
Oh yeah, I agree.
There's no question there. Hey, well, look what's going on in Regeneron this morning. They announced that they're going into testing on a COVID, and it's spiked up to a new all-time high in the face of the market, down 2%. So you ask what to buy. On weakness only, you buy the good quality biotech stocks, Regeneron, Vertex, whatever your flavor of the month is. Biogen's a different story. That seems to be in a flat to down pattern. But Regeneron has been a favorite all along, and it's going to be hard to buy the stocks I like. How do you buy Microsoft? What kind of pullback can you expect in Microsoft, Adobe, Amazon? It's hard to imagine a big pullback unless the market and the SPOOs and Qs pull it down. It's not going to be supply-driven selling. It's going to be a lack of demand on a temporary basis. So we'll see.
Along those lines, and actually, Triple D, I was going to call you and talk to you about this. I just think that what you have right now is, I think that a lot of these momentum, and maybe the funds too, maybe they're just trading on like a 2 to 3 day time frame. I mean, I know that the hedge funds and the people that take the longer positions, but to me, like something like this American Airlines, like, you know, they see it. The momentum gets going. They can bring the bids in. You know, they have the size, they have the capital, and they're doing it with all the, you know, the full intention. And I'm not talking about anything illegal, but just pumping it and knowing that they can get it going. But their full intent, maybe their target was $20 on American Airlines when they started at 16, and that's all they cared about is we're going to get long a zillion at 16. We're selling it at 20, you know, no matter what, 2 or 3 different of those programs get going. And then it gets over 20, and, you know, a lot of these huge players work out of the trades while the little guys getting in. So I think it's just like the time frame too. I mean, the people that were in there, they would have traded 400 million, 300 million in American Airlines. Are those funds coming in and buying, you know, 50 million shares to hold for 6 months? I don't think so. I mean, I think a lot that is what's attributed to these rallies is the shorter and shorter time frames of these larger traders.
Joel, you have to throw in short covering. That's the hidden demand factor in some of these stocks. The hedge funds are short the obvious names. They're short the cyclical stocks, the ones that are hardest hit by COVID. So it's the cruise lines, the airlines, some of the retailers, and they're getting squeezed. There's no question about it.
I think a lot of them squeeze, but I think they redeploy. I think they buy and then I mean, if they're really convicted shorts, you know, like I think, look what happened to Tailored Brand last week, 45% short interest. You know, it went up considerably, and, you know, it was up to 250. And the short interest really never came down. I was looking for more of a short squeeze than that. Then boom, Bloomberg comes out. Exploring bank short beat. Boom, 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 boom. They pound it right back down. So, yeah, short interest is a thing. And, you know, you never know if the shorts are played against some other positions or whatever. But sorry for that little sidebar there, but I just wanted to throw that in.
That's all right. By the way, there is not, according to the experts, a big gamma unwind here.
Okay. Okay.
That's why today's move is even more dramatic. The gamma trade is south of 29.50, and we're not even close.
And you throw in that jobs number on Friday, right? That had everyone scratching their head, right? Because what a great number, great America.
And then the footnote, it didn't do it right anyways.
Yeah,
So,
I'm very suspicious of that number, and maybe that's a part of what the selling is all about, because Powell was suspicious of the number. In his own way, he basically said, we're not going to change policy based on one month's data, but I'm very suspicious of that number.
All right, we just got jobless claims out a couple minutes ago. 1.54 million claims filed last week, which is, I guess, in line or whatever. I mean, the numbers are all astronomical anyway. So 1.54 versus 1.55 million jobless claims filed. Still going down on a weekly basis, but we're still at historical levels here. So I guess it is what it is. I'm not really sure. Marc Chaikin is the founder of Chaikin Analytics. Marc, before I let you go, just any final thoughts here on like how to approach today or tomorrow?
Well, from a trading point of view, be careful because we're likely to test 3,000. It's the obvious magnet point. We're down around, 3,100 right now on the futures, 3,105. And I think you've got to buy the dips, but you can't wait for confirmation. If they get down around 3,000 and you've got a lot of cash, I think you have to put money to work. And if you can't find the individual names, then just buy the cues. So buy the basket.
All right, Marc, thanks a lot for the time as always, and stay safe out there, especially if these cases start to pick up again.
And you as well. They're not picking up in Connecticut, I can tell you that.
All right.
It's a blessing. Be good.
All right, have a good one, Marc.
Marc.
All right, 8:33 here. Tickers flying in the chat.
Yeah, throw a few tickers out there. We've been talking in the overall market here. So what do we got? Let's do 5 minutes tickers here.
Actually, here before we do that, I want to do a couple. There's a few M&A headlines that came out yesterday.
Oh, sure.
That kind of fell through here. So
Sure.
one of them is Gruber is not happening. Grubhub and
Gruber
Gruber would have been a cool name though.
Hans Gruber would have been a cooler name, but that is
What movie's that from, Dennis?
I don't
Mr. Movie Guy.
I had no idea.
Come on.
I don't know where Hans Gruber is from.
Oh, I got you.
No idea.
That's very disappointing, Dennis.
What movie is it? Spencer.
That's from Die Hard. Come on, Dennis. That's
the
best Christmas movie
yes!
ever. I love Die Hard, but I didn't realize that one.
Yes.
Wow.
And he's falling out of the building. He has that look on his face. Remember that?
He has that look of anyone who's long Uber this morning. Like, what did I just do? Anyway, Uber and Grubhub is not to be. Grubhub is going to merge with JustEatTakeaway.com, who I have never heard of. But that's the story there. So Uber down this morning, although that could be with the rest of the market. I'll pull up the Grubhub chart here as well, and you can kind of compare them. Grubhub is up on that news.
I traded this a few times yesterday. I was in Grub. I bought it on the rumor in the middle of the afternoon because I thought that the premium could be okay. And then they came out and said, somebody on CNBC said, oh, it's not going to have a good premium. So I'm like, well, that sucks. And the stock went down. I had bought it around $58 and went down to 55. But I'm like, I still don't believe it. I think the premium is going to be better because I think there's multiple bids. There's been multiple people interested. I don't think they're going to sell just for $60. So I took it home. And then the number came out afterwards, and I actually was trading after hours. I actually sold it a little. It went up, and I actually sold out of it. This was a trade. It was all a trade. I sold out of it at 61, 62 before the number. And then the actual news came out, and they said 75. So I rebought it at 62 and a half, and thinking, okay, it's 75. It's got to get legs to maybe 67, 68 on this, and it would not go up. It just did not want to go up. It was fighting. It was trying to go up a bit. I finally turned around and sold it for a small gain after about 5 to 10 minutes after the headline because it didn't feel like it wanted to go up. And then you're thinking, okay, well, antitrust issues, maybe they hit the acquirer, which is a European company. So multiple factors here why it doesn't trade up to 75. I knew it wasn't going to trade at 75 with antitrust and also with the European company. And they might hit the acquirer over in Europe that you think it's probably going to trade with a 10% discount at least. I just didn't think it would trade with that much of a discount. So I thought it should have went higher. I haven't seen what the European stocks doing. I'm so busy with the markets over here. I never looked over there to the European stock to see what's happening there. But anyways, so I made a little bit of money on it. I made 2 or 3 points on it. It was pretty good. I thought I would have made more on that headline. Didn't work out.
We are sub 3,100, folks. We just hit 30.9875. I even had to put some new numbers on my sheet here. And believe it or not, your 5-day low, just going back 5 days ago, we had a low at 30.8750. So if you're looking to cover a potential short here, we haven't had a limit situation in a while. We still
What's limit down?
It's
a long ways.
Yeah, another 2%, but
yeah,
they'll
it's 5% on the S&Ps. It's a long ways away. I don't think you're gonna see that.
Not today, but yeah, they'll do it overnight. Really,
all these almost happen.
So me and you
overnight.
can argue about the spiders and the S&Ps.
I mean, okay. So here's the situation. If you're in all those trash stocks, I mean, I hope you're not. If you've been listening to the show, you probably aren't, because we've been trashing the trash stocks. Even when they were going up, we were trashing them. We're trashing them on the way down here too. You're in the airlines, you're in the cruise lines, you're in those things long. It feels like today could be the capitulation day where, Robinhood traders are going to say, get me the hell out. So maybe they open near the lows. I would mark, if I'm trading these things, see where they open. Write that down. Do you see them bounce right away from the open, or do you see them start to leak through the open? But let's say they open, they go down a little bit, come back up through the open. That's the trading opportunity. Something Joel Elconin taught me, 20 years ago, is that open is so critical because it's such a big liquidity event. So many people are marked from there. So meaning that's your price where you're in or you're out. So write down the opening price. Let's just say we'll set up a hypothetical situation. RCL you're interested in for whatever reason. I'm not advocating to buy anything. None of this junk. But anyways, if you are so inclined to make trades, and then put the trading hat on, RCL opens, let's say $54. It goes down to 52 on a flush. It comes back up to 54 and starts going through the opening price. That's where I would strike long, get the momentum on your side. So not so much trying to catch the falling knife, but trying to catch it when the momentum turns. That's how I've made my money trading. That's a Joel Elconin tactic right there. So I obviously, Joel's on the show here right now, but I just told your whole strategies is looking at that opening price and then coming back from there. Not trying to say, oh, it's going to open too low, I'm just going to buy the open, because you know what? The flush could happen after the open too. These are crowded trades. A lot of these trades, very crowded.
Can we clarify? Because there are probably like degrees of trash stocks, right? Like Boeing, but like Boeing.
Yeah, there is.
Boeing, no, it's true. I'm not laughing.
The airlines and the cruise stocks and Boeing are in a different group than like Genius Brands and Express and all these stocks that are just ripping off that were nothing before this, right? So there are degrees. So can we talk about that for a second? There are degrees of when you say trash stocks. These companies that were well capitalized and have real business. The airline.
All these companies have real businesses, though. So when I'm saying trash stocks, I mean the stocks that are in a negative cash flow situation right now. You could call them zombie companies, you can call them whatever you want, but I'm not saying trash companies. I'm saying trash stocks. The stocks that they were thrown out for the trash in March, they've had wicked bounces. But, now you're coming in. If you are so inclined to get in these things, this is a pullback. I mean, if you're so inclined, even the banks, you're so inclined in saying, I missed the Wells Fargo boat. Well, the boat just came back to the dock. So if you think that we are not going to get hit hard in a second lockdown, if you think COVID is not going to hit us hard in a second wave, today is a buying opportunity on all those stocks. I don't know if that's the case, which is why maybe, I'm more focused on still tech and stuff that works, even if COVID sticks around, because I kind of think COVID's going to stick around. But I might add a bank or two if it looks as a trade. So Wells Fargo, set up a trade for you here. What's a 50%?
I already figured it for you. 27.
I knew I was going to ask for it.
Yeah. 27.75.
So we're just through the 50% retracement right now in 4 days. So we had a run for 3 weeks.
Yeah.
And in 4 days, we just retraced it all. So you've got some people throwing in the towel here this morning. They're slamming Wells Fargo down. I would say, and I hope you threw in the towel the day I was telling you to throw in the towel, which was right at the top of the 33.89. But if you weren't listening to the show or weren't listening to what I was talking about, and you're in this thing still, I think I'd wait to see how it materializes today, because some of these things could turn on a day like this. So let's see where it opens. Wells Fargo opens, let's say 27. Flushes them to 26.5, comes back through 27, I might strike and try some longs. If it continues to flush, I have no trades. I'll watch the fall. But you see how I'm protecting myself there. That in the event that this ugly day turns into a really ugly day, I'm not going to get hit. In the event that this ugly day starts to look like it rebounds, I'll start to buy some stocks. That's how I protect myself. And so what do you do after that point? Let's say, it gets up through the open and you buy it. Contingency plan now is I stop myself out at the low of the day. So Wells Fargo, hypothetical situation, opens 27, flushes to 26, comes back up to 27. That's where I'm going to buy. It's like 27.05, 27.10 because momentum's now on my side. I would place my stop then at $26. So I'm risking $1 and saying that I think the flush happened. That's how I set up those trades. That would have worked on the opposite back last Friday. If you were doing that, you would have taken zero heat on the open. But I mean, there's opportunities like American Airlines, maybe a better example, because it did open up. It opened up a little higher, but then came back through the open and then never looked back. So that's how I trade. That's how I protect myself.
And this is just different stocks. And I'm really glad that you mentioned that, Spencer, about different level of trash stocks. There's also just different level of, big cap stocks. And Wells Fargo is a stock that, let's say you really want to buy it, but you're not doing anything today. Wells Fargo is a stock that will give you a second look at an area. When it made that 22 bottom, right? The next day, we talked about that 22 low. I just switched over to work. When the day that it made the 22 low, I think the next day it made a 22.02 low. Okay. So if you sat out that whole day when it swooned down, you looked at the 22 low, you were keeping an eye on 22 the next day, you got it. Same thing on the upside, but not as close. Let's say you were thinking of selling on that Friday at 33.89. You didn't. The next day, it still gave you a shot in the 33 handle. It gave you a shot within 45 cents. So stocks like Wells Fargo are going to do that. Stocks like GE are going to do that. Ford, some of your more heavily traded big cap stocks. Others, these wild childs, they spike all over the place. But even if you don't want to act today on something like Wells Fargo, you could get a good reference point. That's how you picked up that Amazon after earnings. Was you didn't strike the day that it made the low. The second day. So a lot of different ways to look at things.
I have a couple points to add.
Sure.
Did you guys see the report from Bloomberg last week that the founder of Chewy cashed out of his Chewy stake, right? And he bought two stocks.
What did he buy?
He bought Apple and he bought Wells Fargo.
He sold all
of his stake?
That's what the article said. Yeah, he sold his stake in Chewy and bought Apple and Wells Fargo.
When the founder sells all their stock, it's time to ring the register.
No,
okay, Chewy, we talked Chewy.
That's not. You don't know how that happened. I mean, he's the founder, but he might not be I don't know if he's a CEO anymore, right?
I don't buy companies where the founder sells it all.
You don't even know the story, okay?
You just told me the story.
Yeah, Spencer, unless you're making it up.
I don't know how involved he is with the company is what I'm saying. So it's not necessarily an indictment of the company. I'm just saying he's the founder. He could have left the company 3 years ago for all I know.
We talked Chewy yesterday. Chewy's a lockdown play. Chewy's a stock that, it's down 4% in the pre-market. It's a stock that could bounce back because if you think we're going into lockdown, people are going to buy their pet food online. It's the only reason it's at $49. It's COVID. This is all COVID. This run in Chewy isn't, the reopening trade. This is all a play on that. There's online sales that got jacked in the last couple months because we're all sitting at home and we're buying our pet food online. COVID bonus. I've said before, Chewy feels like pets.com part 2. It's went up and it was a play. I mean, it was a play to get in all this stuff. It's like why I turned on Peloton. I had originally called Peloton was $25. And just a bicycle with an iPad on it. And you know what? I went long it because the COVID changed that whole story, changed that whole narrative. Same thing for Chewy. As long as COVID is around, Chewy's going to be okay. If we solve COVID, I don't want to own Chewy. And that's just, something. So I would say on pullbacks, Chewy maybe still be a buy because COVID isn't going away anytime soon. But if we solve the COVID issue with vaccine or whatever it is, therapies, I don't think CHWY is a $47 stock.
I mean, if you want to get in Chewy, I mean, I it is true it's a COVID stock. It just came off earnings, made a new all-time high. I would rather buy this thing at 52.40. You know, he had two highs, 52.30 to
Breaking out.
52.35 from yesterday and
You'd
52.26.
rather buy the breakout.
They're just trying to stab it here at, the 4-day low at 47.55, because, or if you are trying, if you're taking Dennis's, side of the trade there and you are, picking it up, then, I mean, just look at your daily lows for outs. I mean, if you're buying it at 47.5, where's it trading right there now? I mean, I'm not giving the thing to 44. I just, take a couple stabs at it before you get it right. Because to me, I don't know. There's a lot of air underneath this one, and it just had it earnings. It just had it catalyst. I don't see analysts coming out and like upgrading this thing. So little breather in that one. Longer term. That's just the way I'm looking at it.
I have one more comment on that last discussion you guys were just having. It's a reflection of a comment in the chat. Our very own King of the Hill, Rusty Shackelford, great alias, by the way, noting that this is a great lesson for anyone who's
not alias. That's really Rusty Shackelford.
Yeah, okay. That's an alias. Anyway, anyone who's stuck in these airline stocks, if you're stuck in Genius Brands or a cruise line or whatever, this is a great time to realize you need an exit plan, right? If you're stuck now, it's a little bit late, but now going forward, if you're going to buy something, have an out, right? Know when you're going to get out. And even if it's a loss, even if I'm cutting the losses at 10%, whatever, 15%, have an out. This is a great lesson. And there's no one who can teach you what it feels like to lose money or win money in the market. So you kind of have to just learn by going through it. But this is a great experience for a lot of people who are maybe trapped in these stocks. And now you need an out.
It's the rounders thing. Have yourself an out.
Yeah.
I mean, that's it. Like, have yourself outs, and that, and I've used that. I've even written a CFA article with that exact title. Always have an out when you're trading. I don't enter a trade thinking about how much money I can make. I never, listen to this, write this down, newer traders especially. I never enter a trade thinking about how much money I can make. I enter the trade thinking about how much money I can lose. So I first think about my risk, and then I think about my return. I don't think about my return and ignore my risk. I think about my risk and then my return. Somebody's asking me about space right now. It's at that 15 support. I've liked the stock. I bought it at 16. It went up to 17.5. It's pulling back with the overall market here. 1460 is a pretty big line in the sand here for me. If it starts to breach that, maybe this trade, which was going to hopefully be an investment, is going to turn back into a trade, and I'm going to eat my loss. 1460 is a big level for it. It hasn't breached that yet. It's getting slammed with the overall market here this morning, like everything is. It's down 6%. But you got to be very, very careful when you're trading, all of this stuff. You need to have yourself outs. I mean, you can define if you're willing to, if you're willing to lose 100% on something, you better be making 100% on something, because I can promise you one thing. If you're always taking your 2, 3, 5% winners and holding on to your stocks until they come back, never taking a loser, and we've seen this again and again in the prop industry, from retail comes to prop, the retail trader will say, I've never had a loss before. How is that possible? It means you've never taken a loss before, because your stocks have always come back. Eventually, you will be stuck in stocks that don't come back. Eventually, your portfolio will be a bunch of losers, and eventually you will lose most of your capital. That is a given. If you don't take losses, eventually the market will get you, because you're always spinning out. If you just buy and hold, you're fine. If you're holding on to your winners, making 200-300% on your winners, and you want to hold stuff down 100%, that's okay. But if you're always taking your winners at 2-3%, I'm just going to make my 2%. And when I make my 2%, I'm good to go. And if I get down 5-10%, well, I'm going to keep holding on until I get back up 2%, and then I'm going to sell it. That is the recipe, the guaranteed recipe to lose in this business. You have to cut losers if you are a trader. If you're an investor, Warren Buffett, a little different story, but even Warren Buffett cuts losers. We saw that with the airlines. Okay, interrupt me.
Mojo Politic hopping in the pre-market chat. He says he's one of these new Robin Hood morons that was up on Friday and now he's down. And he's asking, what is an out? And what he means by an out is when you're entering a trade, let's say you're buying a stock at $1.50 and you hope to make 50 cents on the trade. Good risk reward ratio. This is very simple. Your out would be 25 cents. Okay. You're risking 25 to make 50. So an out, there's a lot of different terms, a stop, an exit, a place where you're going to let go of the trade. And, if you look at it too, Dennis, look at the years we've been doing stuff. Sometimes the best feeling is when you get out of a losing trade.
Oh my God.
You have some.
That
Some
was
of my
me.
best trades were losers.
That was me when I sold my Under Armour in December, and it's one of the best trades I sold at a loss. I lost, I don't know, like 5% or something. One of the best trades I've ever made was that losing trade.
It's true. Some of the best trades I've ever made are losers. When you take and you work out of something, or you take the loser fast and then you watch it just fall and fall and fall, and you're like, thank goodness I got out of that. I mean, my Kraft Heinz was a loser back in the day at 60. Well, it's at 32. It's a really good loser to take. I mean, and just going back to what Joel says, we're not calling Robinhood traders morons.
No. He called himself that.
Yeah. He was just reading it from the chat. So I don't want people taking offense.
Sure.
Robinhood traders. There's a lot of smart traders even in Robinhood. Don't kid yourself. There's a lot of smart retail traders. I was just quoting Reuters yesterday saying, and we were talking about the retail traders, and I'm like, you got to look out for retail traders. You never had to do that before. But, these retail traders gang up on something, they really move. And some of these retail traders are really good. So, obviously there's newer traders that are in the business. Anybody who's newer to the business is not going to have the expertise, and they're probably be more apt to lose money in the long run because it takes time to figure this business out. But again, just, outs is all just about discipline, having the discipline to say, I'm down money in this. I don't need to get my money back. I'm going to cut my loss and move on. Because like I said, a lot of times, we had a trader at Bright Trading, when we first started, and we won't use his name, but you know who I'm talking about, Joel. And he'd put on a position and go up, he'd sell it. If if it went down, he'd double down. And if it went down more, he'd double down again. If it went down more, he'd double down again. And it would come back. And 99% of the time by that strategy, you get your money back. But that 1 to 2% that it doesn't come back, you lose months or years or your entire account. So eventually, inevitably, you're going to be in a stock that is not going to come back. You just picked wrong. I pick wrong. Everybody picks wrong. Everybody makes mistakes. This business is not about what you make on your winning trades. It's about what you lose on your losing trades. And if you can cut those losers and move on, you will be in this business a long time.
Dennis, you should put that on your gravestone. That was amazing.
Another chapter in the book.
It's not about what you make on your winners. It's about what you lose on your losers. Yeah, that's it right there.
In a nutshell.
Okay, yeah, and never found average down. That's the exact opposite of what we're talking about.
That's the exact opposite. That's a joke Joel uses. It is a joke. Never frown average down. I use that with the traders too. It's like, I never frown average down. It's funny, but don't do it.
So if you loved it at 100, at 90, it's just, and I got that from
Boiler Room.
Also on the oldie desk,
Oh, yeah.
when we traded, and the guy would be, the head of the desk goes, hey, you're long 57,000 of this at 90, and like, why? I like it at 90, then it's at 82. You must absolutely love it now. And if it goes to 72, I mean, what a bargain. But no, that's the way you get in trouble. But I don't think we have many people here that are doing that, or else they wouldn't be tuning in.
Hopefully not. Okay. A lot of questions here from the chat. Someone asked if you consider MGM, like put that in that group of trash stocks. Yeah, you would put it in the group with the airlines.
Yeah, I would.
And the cruise lines. It's moving with that group. So
I might. But I look at this for a trade. Joel set up the 50% retracement. He's the fib master over here. $11. I'll let you do the math. 22. Looks like an 11-point move.
Yep.
Take 5.5 off that from 22. You get yourself. You're getting close. 16.5. Is that right?
Yeah, that's when you were, let's see, the low of the move. I see a $6 low. And how high did it get?
I didn't take that. I went from the low of the move.
That's you know what? And that would have stung you in American Airlines yesterday, because you were looking from the breakout.
You like the whole low of the move.
I like the whole, especially when they move up like that. But I looked from 6 to, let's call it 24. That's easy. 18.9. Yeah. $15-16. Another stock, and it's not a trash stock, but Ford. Like, where do you throw that in there? I mean, that's a dog stock, but they got that thing over 760.
I throw it in the same thing. $6. Oh, you're getting $6. That was the breakout. So you're coming back to the breakout zone where, you know, there's going to be some memory down here. It's an interesting setup at $6 here today. You know what? Some of these stocks have really been beat up. There's going to be an opportunity potentially today to actually get long some of these things as trades. But if they open and they continue to leak and start taking out the 50% retracement, before it opens at $6 and starts going 580, it's like, oh, okay, it's not working. So again, my out is, you know, going to be defined from that opening price today. And if they don't come back up through those opening prices, I may never enter the trades. But if I do enter the trades, my out would be then the low of the day. So again, defining my risk before I enter the trade.
All right, what do you want to cover, Spencer? We got 3
Yeah,
minutes.
Couple minutes left, and before I'm going to grab our next guest of the day. Man, I wish I'm trying to go through the chat, trying to go back.
How about Genius? We got a lot of calls on this Genius.
I don't know what that is.
Yeah, I don't want to talk about it either, but
it's one of these.
Yeah, I don't know what to tell people.
That's why I try to be generic with it. If you're in like a Genius Brands or or an Express Spot this morning or something.
All this stuff is a story. There's a story. It got hot. Story's cooled off. Stock's broken now. Is it going back to $10? Probably not.
Okay.
Is it going back to $5? Probably not. It's down to $2.74. It looks like everybody's caught in this thing. It's probably going back to zero eventually. My thoughts. I know nothing about the company. I don't even know what they do. But just looking at this technical, I would think this stock eventually, when I look at it 6 months from now, is under $1.
This got Citron too.
That's my thoughts.
This got Citron
just
too.
From knowing nothing about the company, we'll look at it, write it down, look at it, put a note in your calendar, look at this in 6 months. I think within 6 months, it's under $1.
We do have people who will write that down and call you out in 6 months.
I don't like that chart at all.
And then remind us about it. Here's a stock we can look at, and I believe we were asked about this yesterday as well, but Roku.
You know what? Man, I have a love-hate with this stock. I trade it all the time.
Me too, Dennis. Me too.
The valuation's ridiculous. It's still just TiVo Part 2, in my opinion. This is the hookup for, you know, getting you online, and TiVo was the same thing to, you know, to obviously do DVRing, and then they started putting in every receiver and every, you know, and then TiVo obviously. And where is TiVo?
Still around.
It's still around.
TiVo's hanging around.
Roku will still be around. The valuation's ridiculous. It's the hot thing. But again, this is a lockdown play. So, in the potential that we have to go in a second lockdown, Roku should perform well. But it didn't perform that well in May. It should have done better with some of these other lockdown stocks. And yes, it came back from the lows, but it didn't take off and like a Shopify and start breaking out, making new highs like Netflix. So that's concerning in itself. $100 is the line in the sand for this. If you're buying it, you absolutely do not want to own this under $100, because if it goes under $100, it's going to be at 80, I think. So I'd say if you're buying pullbacks, that would be my out. Maybe I'm going to nibble on some just as a lockdown play, but don't get married to this position because I don't think the value is there for this thing long term.
Yeah, it looked like it was breaking out yesterday. It cleared that 115, couple days of consolidation, peeled back off the close. Someone was asking about this during the afternoon show. And it's pesky there. It looked like it had a breakout. If this holds in there pretty well today, I see you're right about that $100 level. We made that low at 10019. Maybe if you're looking for a little bit lower risk trade, like you don't want to risk from 110, 108.60 is your 2-day low. See how it reacts there? I mean, there is a $4 drop to the next daily low, but if you're looking at it, and also the other thing I like about that 108, which is going back to the 50%, you had a bump from 100 to 116 halfway back. People that feel they missed the bottom of this really want to own it. They'll be making bids there at 108. So not a bad level there in Roku. And Spencer's going to come over to my house. I'm going to get rid of my cable, and he's going to set up Roku and redo all the internet. Right. I'm going to get my bills way down this weekend.
Okay, Joel, this weekend. All right. On that note, it's 9 o'clock. I want to bring on our next guest, Joel and Dennis, if you want to hang out.
I'm going to say goodbye, but I'll be listening.
I'm going to say goodbye. Hey, folks, if you want to cover some more issues, join me on hotmic.io, code Joel317. I'll cover all the issues we missed. I'll be over there in a minute. And Spencer, who's our guest tomorrow? Who's our guest tomorrow?
Tomorrow's guest is Jason Resnick.
I know that guy.
Okay. Friday. All right. I'm on now with Steve Kalayjian, though. He's a chief market strategist and co-founder of TickerTocker. Steve, good morning. Oh, I can't hear you. Don't have any audio. So check your mic settings on your Zoom. Make sure it's hooked up to your whatever mic you're using. and we'll get you here. We had this issue yesterday with the guest as well, so should be a quick fix here. But Steve Kalayjian, as I mentioned, he's the co-founder of TickerTocker. He's also the chief market strategist, has over 30 years of experience trading everything from stocks, futures, forex. I hear you now, Steve. Good morning.
Hey, good morning, Spencer. Thanks for having me. Good morning, everybody.
All right, let's just start macro here, Steve. It's been a while since we caught up. How have you handled? Let's talk about how'd you handle the sell-off, and how have you handled this rally here in the past month and a half? It's been
when we got that pushed down below 19,000, we probably had one of the most oversold conditions, and probably in my 36 years of being in the industry. And I knew we were going to get a pretty good rally back. I thought we were going to get a rally back probably between the 22.5 and the 23.5 range. But when we exceeded those levels, I thought that there was a disconnect here. I saw some significant patterns on the weekly charts that I have, and basically using my own predictive analytics, when we pushed up above the 27,000 and the S&Ps above the 3,200, I was looking for a top between the actually the 3150 and the 3200 range. I think the print high was 3221, which was I think yesterday. And so basically I was looking at a means divergence, and so using my predictive analytics, we were some $19 away, 19 points away on the exchange traded fund spiders from my weighted moving average. And I was letting a lot of people know that there are other ways to play the market for downside, for example, like the SDAOs, the TZAs, the QUIDs, and instruments like that. But I do believe that the next push down should make a higher low. I'm a big believer that the way, if you look up, I don't know if you have my chart or not, I think I sent it to you, but there are so many gaps below the market, and being involved in this game, and I only trade gaps when there's excessive moves to the down and upside. So because I do believe that the gaps eventually do get filled. If you look at the spiders, there's a monstrous gap at the 286 level. So that for me could bring you to an oversold condition for another push up. I think that the rotation into the NASDAQ was something that obviously up, close to, 4,000 points off the low there. But basically, I think that the next push down, which I think should make a higher low, I think the NASDAQ is the place to be going
So
forward.
Is that how you're positioned now? You're positioned for what downside to what, the 290 area or something like that?
Well, I'm looking for potentially now. Ultimately, if I again, I sent you my charts. I don't know if you have them or not, but there's a gap on the spiders at the 248 level, which brings the Dow ultimately down to the 20,500, 21,000 range. I don't know if we get there this time around, but ultimately, I do see the first target around the 286 level on the spiders, and that that could be another where are we now 306. So you're probably talking another 1,500 points lower before we get some type of a bounce. Again, looking at the way the market traded in the last week and a half, we were up, 6-7 days in a row. You had probably one of the most, in the last 5 years, overbought conditions based upon my work. So again, I think that the volatility is here to stay. I think there are great names to buy on these pullbacks. One of my favorite stocks, when I heard that Amazon was going to hire 100,000 new people, I said that Amazon, when it was 1627, was the stock to buy, and it rallied 1,000 points. But names like Facebook, Microsoft, Amazon, Apple, in that space, I do believe will make higher lows in the months ahead.
Okay, so outside of the FANG group, is there a particular area, a sector, an industry that you're bullish on, or maybe even just that you're particularly bearish on?
Yeah. Well, basically, I don't like the financials. I don't like the oil service stocks or oil stocks here. I think that
so you would just fade the rally in XLF or in the banks or any of these.
Yeah, I mean, I don't like when the airlines were up 2 days ago, I was jumping up and down like a gorilla who hasn't eaten in a month, and I'm just saying to myself, good Lord God, there's no rhyme or reason to be buying these airlines up at these levels, and Boeing hit a high of 227, and exploded. And, I just thought that, I mean, look, it went parabolic here. It's just, and look at the significant overhead resistance above. So I didn't think that, and then what? They came out, some news agency reported that the airlines are going to lose like 85 billion this year and 100 billion next year. So, but, again, I think there's better names to be buying in going forward.
Yeah, I mean, the Jets ETF is just absurd. They had 30, how much? They had 30 million in assets on March 2nd, and they're up to $1 billion in assets. So It's just somebody, I don't know who, but a lot of people just have been buying and buying and buying and buying. And unfortunately, a lot of them are now trapped. So,
well, it could also have been, one of the most vicious rallies. And again, this August 1st, I'll be in trading for 37 years. Is short covering rallies can really, disguise themselves as a rally too. And I think short covering rallies are probably, in my opinion, more vicious than an ordinary rally.
Yeah,
because that's just from my experience.
So that's a really good point, Steve. You've been trading, as you mentioned, for 37 years, but we've never experienced a 100-day period like this one, where the sell-off was as swift and the rebound was as swift. So, how do you deal with that? You sort of have to throw everything, your experience. Nothing compares to this, right? So how do you trade this? How do you deal with this market?
Well, again, I use my own predictive analytics. I have a lot of people here at TickerTocker that are experts on my platform. Plus, whether I look at my specialty is day trading the markets, but I also have intermediate and long-term views that people follow me on. So again, at TickerTocker, we have so many different professional leaders that have skills in so many different areas of trading. So, but again, to answer your question, I would believe this was never going to be a V. This was going to be a U, right? So I never believed that we were gonna do this, and I know that Larry Kudlow thought that the third quarter of this year we were gonna have excessive growth, and I think and I do believe we are in a recession. So I don't believe that you come out of a recession after the second quarter. I think it takes sometimes 12 to 14 quarters to come out of a recession.
Steve, tell me all those monitors, they aren't all yours, right? I mean, they aren't. That's not your setup, right?
Yeah, I have 40 monitors I stare at all day.
Wait, seriously?
Yeah.
Oh my goodness.
I was given a gift, and I'm able to see things and produce, and give people.
How did you? I don't even 40. That's what you said?
Yeah, 40 30-inch monitors.
I've got 5.
I've been doing this my whole life. I mean, I was given a gift, and people come here and they can see. Boom! I can go to the bathroom, come back, and like, okay, short the S&Ps, or short Boeing or something. So yeah, I built my own predictive analytics. I was able to, there's an ideological process here. So basically, I look at things that are going to move the market. Obviously, the ETFs, the 4 big ETFs, the Diamond, Spiders, Qs, the Russell, and then I look at the continuous contracts, and then I look at the big, FANG stocks, obviously, and all the other names in the industry that, that I can fit here. I look at gold, silver, but I'm able to see things in a way that really produces the content for the average person. And I'm teaching my predictive analytics to them at the same time as I'm calling out the ideas.
Steve, give us one stock or ETF that is on your radar for today specifically.
For today, I think for a trade or for...
Yeah, for a trade.
Yeah, they're going to gap down probably 700-800 points. I do believe that the Spiders are probably a good buy at the opening or right after the opening for a good, some type of a bounce, and the Qs most likely. These I think, because when you gap down like that, I know the pattern. They'll set up probably between 10:15 and 11 o'clock for a short. But I do believe that you can, if you buy a little bit on the opening, they push down, you buy more. I think you're going to get a good snapback.
Okay. All right. Steve Kalayjian is the co-founder and the chief market strategist at TickerTocker. Steve, thanks so much for the time today.
Thanks, Spencer. Thanks for having me. Have a great day.
All right. And on that note, that'll be a wrap as we head towards the lows of the pre-market session here. I don't even know if we've bounced at all here since the show started. You don't see that too often on our show, but I guess we're off the lows by a hair, but not by a lot. So anyway, that's it for us. Thanks to our guests, Steve Kalayjian and Marc Chaikin. Thanks to all of you in our chats. Please don't forget to hit that like button and subscribe on YouTube. It helps us with their algorithm. You can always catch a replay of this show on our podcast or on YouTube, whichever platform you prefer. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your Thursday. Joel and I will be back at 3:40 for the afternoon show. Until then, stay safe and good luck out there.